Thank you for joining me on this morning drive here on the first weekend after Liberation Day. It was Wednesday when the president used his emergency powers to pass tariffs against every country on the planet simultaneously, with a baseline of 10%. And the next 2 days, the market sort of rolled over in shock. You had China announcing retaliatory tariffs, and there will likely be other countries to follow as time goes on. And the world is just reeling from this major reset on international trade triggered by the United States that people just did not see coming to the particular level of impact that it's had. So I'm certainly still reevaluating what the future is going to hold. Looking at 10% is bothersome. Certainly, think about food, and this is the factor that will affect people who are on the bottom rung the most. Coffee will be 10% more expensive. Chocolate will be 10% more expensive because these are things that we have to import. We don't grow them in this country. And there's a lot of foods like that. I wonder what's going to happen to Korean markets, which have become very popular across the United States. That's going to be hard. A lot of regular American supermarkets will probably spread the price increase around among their different products. So you might actually end up only seeing a 5% price increase. But if you have a large family, if you buy a lot of food, if you have specialty diets and there are just things that you can't live without and you love eating, you're eventually going to get impacted by all of that. So, and then of course, we have the soap world. I think that is worth mentioning on this YouTube channel. It's sad to me that some of my favorite bar soaps, the Australian botanical soaps, they're all made in Australia. Those are imports, so those will go up 10%. You're going to have other products that have shea butter, which is a huge, huge ingredient in many soaps and body washes now. We really don't have any shea trees in the United States. Those are all in West Africa, so that ingredient is an import. I've had small soap makers reach out to me and say that a lot of the ingredients that they use in their products are imported. So we will see prices begin to rise in the soap world. It might take a little bit of time. One good thing about bar soaps is that they do hold up really well, and there's probably a lot of stock on the shelves currently. So if there are products that you do like, it's not a bad time to stock up on them. Also, it's going to be country dependent. It'll be 10% for some countries, and then other. Let's say you liked Korean soaps. I think the tariffs on Korea are maybe about 25%. So if you can get the products in stores today before the prices have been adjusted, that is a strategy to consider. Moving on from the soap world, one thing that I've been thinking about just for a moment, speaking of South Korea, is they make a lot of phones. Like I'm rocking a Samsung S21 Ultra. It's a really powerful phone from several years ago. It's fantastic. And just for a moment, I did think about upgrading to a used phone because with Apple and Samsung, as long as the imports are holding up, those prices are going to increase dramatically. So yeah, the tariffs on them are pretty extreme. I guess what I'm trying to say is if you are soon to be in the market and you would like to save a little bit of money and get yourself a used phone, there's never been a better time to go over to the used cell phone marketplace called Back Market. I've talked about them before, and they really still currently have incredible deals on used cell phones, and I bought several products from them before. That's why I'm repping them. I don't get paid to shout them out. I was almost going to pull the trigger on getting a Pixel 8 Pro, but then I'm like, I don't need another phone because the one I'm rocking is still so powerful. I've got the S21 Ultra version that's got 16 gigabytes, 500 gigabytes of storage, or 16 gigabytes of RAM, I should say. So I'm set for quite some time. And that even goes into autos, right? Like for a while, I was thinking about getting rid of my used, I've got a secondary vehicle that I don't use all the time. It's a 2013 Honda Civic with 108,000 miles on it. And that was actually surprisingly made in America. But they made it like a tank. Those things, I've watched some recent reviews. I've read commentary about the cars within the last 2 years, and everyone who still has one, they're like, I've got 200,000 miles on it, I've got 300,000 miles on it, and other than basic issues, I've never had major problems with the car, and people love them as commuter vehicles due to their reliability. So I was going to sell the car and then use the proceeds to pay off my auto loan, but now I'm thinking, you know what, I'm just going to hold on to it because certainly if I just keep the car over the next few months, it will probably end up appreciating in value. So maybe 3 months from now, I'll sell it, although one can't say how long the tariffs will last. I don't think that our economy could last for 3 months, right? With the current level of tariffs, I think we have 30 days, right? This situation must resolve itself in 30 days, or we will really risk fiscal calamity. The president's been quoted as saying that this can go on for months, and I don't think that will be the case. You look at the next week, I think it's going to be another bloodbath. Last week, the market being overvalued, it could afford to take some losses, I honestly think. And they were significant losses, but this next week is when you're really going to start to cut into the bone, if you would. So I'm actually anticipating this as a person who does want to get ahead a little bit when it comes to trading. I've had very defensive positions. So in the last month, the general market is down about 5.5%, 6%, and I personally am only down about 3.5%. And I am looking to make some trades here, and I'm entirely willing to talk about my moves. And I will first start off by telling you that I am a unsophisticated investor, and I am not qualified to give any person listening to me financial advice, nor should you ever at any point follow financial advice given by me. You should talk to your financial advisor or some other trusted, well-educated person in financial markets. Okay, now that that's out of the way and I've protected myself from any potential liability, so I did a few years ago take out a decent position in gold ETFs because I'm like, yeah, the US doesn't know how to manage its own finances, and I could see the dollar having some issues in the future. And here we are now in the future. And I'm not a huge fan of commodity ETFs like gold because you do have to pay holding fees and you don't get dividends. It's not the greatest in terms of investment unless you can be relatively sure that it will appreciate, and it's done that quite well. So I also hold regular stocks, which I do love. Apollo Management has been one of my favorites for a really long time. At one point, they were up 100. Well, I was up 183% with Apollo, and sadly, they have been getting savaged lately. And for the first time ever, I decided to sell, and I'm still going to make a 100% profit. I bought in when they were $50 a share, and for the longest time, I really did think that they were going to go the way of Berkshire Hathaway, and so it was really an emotional decision last week on Friday to sell some shares. But having made a 100% profit, it is time to cash in on other opportunities because it's not the same game that it's always been, right? We're not playing by an established rule book anytime in my lifetime, at least. And so it's going to be every man for themselves in terms of trading, every man and woman, I should say. And I don't have a financial advisor. I make my own decisions for my portfolio, um, not necessarily always using the best logic. I would have to say that a lot of times it is gut instinct. But generally, I've done better. I've beaten the market for the last few years. And I really don't have a choice. I can't afford to make mistakes because I did get it started in investing rather later in life, so I simply cannot afford to fail. Anyways, I pivoted out of APO, and then I noticed during the day that airline stocks were just being demolished. We're talking about Southwest, Delta, United, American. They were down sometimes by 50% over the last 30 days. Now, Southwest has come down a lot for other factors. They're no longer having free bags has been very unpopular with their consumer base. And so you're going to have people who are willing to go to other airlines now, like more middle class airlines such as American, United, and Delta. I also tend to think that Southwest, if you look at the PE ratio, that's still pretty high. But if you look at Delta with their PE ratio, that is 6.99. Then you have United, their price to earnings ratio, 6.10. You have American Airlines, they are at 7.63. So I'm a big fan of low price to earnings ratios. Many companies for the longest time have been significantly overbought, and I just have no desire to jump in on 40 or 60 times earnings. So it's been interesting watching them get demolished recently. One of the factors that drove me to purchase airline stocks, which are notoriously volatile and sometimes very, very dangerous, is the fact that the price of oil had fallen, and that is great for airlines because that means their costs are reduced, and the price had fallen to $62 a barrel. And jet fuel is a major input for airlines. And I know a lot of analysts out there are saying that the consumer is going to retract and that they are not going to travel because of any potential recession, or that people are over traveled post COVID. I honest to goodness don't think that is the case. I think that people have changed their habits over the long term, and they want to go to different places. They want to fly to Rome. They want to go to San Diego in the summertime, especially in the Southwest when it's an inferno. People just want to get the heck out of there. They're going to jump on a plane and they're going to go somewhere, even if money is tight. So I don't think people are going to change their travel habits dramatically. When they get to a new destination, they might not eat out 5 times a week. Maybe they'll stop at the supermarket and get some snacks and stuff so that they don't have to spend as much money. Certain airlines, I think, may suffer. JetBlue is hanging on. You have Spirit and Frontier. I would not invest in them personally. I'm not. That is above my threshold for risk appetite. But yeah, so I am looking forward. This is a war. We are now at financial war with the rest of the world, and I consider myself engaged in battle. Not in an adversarial sense. I don't think that we should have engaged upon this trade war. I am not a fan of how Canada has been treated, one of our closest allies. Certainly, you can talk some shit about their premier, Justin Trudeau. Like, it was fine if Trump didn't like him, and you want to say bad things, go ahead. Do your political thing. Have public spats with other leaders. That's fine. But deeply insulting the population of Canada by saying that they shouldn't have sovereignty is just something I never thought an American head of state would ever utter. And that's really pissed off the Canadians. Like, they are, and they rarely get mad. They're very nice people, very polite. They're good friends of ours, but they're angry now, and they are currently engaged in boycotting U.S. goods, which is a little bit ironic because in past recessions, a very common and safe trade to make was if you could see the pain train coming, you would sort of pivot into beverage makers. And I'm talking about beverage makers of alcoholic drinks, Anheuser-Busch and some of the other big boys. There have been a few mergers over the years, so I don't remember who's who. But that's always been a long-term trade because people would self-medicate more during difficult economic conditions. And I certainly have been doing a lot of that these last few days. Not going to lie, I've been crashing out for like the last 2 weeks. Anyhow, that old tried and true trade, that doesn't hold up anymore because we sell a significant portion of alcoholic beverages in the Canadian market. And so now drink makers are going to be hit pretty hard by that boycott. So this is what I mean when I say that the world has changed and the old playbooks are not already pre-written. And that's one of the reasons I've left Apollo Management Group a little bit, because I have to trust that in this current era of disruption that I will be able to make decisions as capable as those folks, which is, ironic. Those are paid professionals who are really good at what they do. And I'm just going to have to hope I get lucky as well. So the first step is trying to figure out what the future is going to hold over the next week. And I started by thinking that maybe by Wednesday we would see the Congress start to take forceful action. And by the Congress, I'm talking about the Republican members of Congress, because the Democrats are the opposition party and they're already united against the president. They've managed to snag about 4 Republicans, but you have to figure any legislation that they would pass to stop his emergency powers would require 2/3 of Congress. So you would need a lot more Republicans to break. And I don't think, after giving it more thought, that enough Republicans will break by this Wednesday. And I certainly don't think that the president himself is going to change his outlook on tariffs, because he still has a lot of support amongst his base. Being a former Republican myself, and I did vote for him in his first term, but then I saw the light. I'm like, nope, never again. And that's also the time I left the party. But I have, Facebook connections, and so this is anecdotal, an anecdotal assessment based off of some of the comments I've seen among people in my social network who are, still Republicans and who support the president. And there is still a groundswell of support for his actions amongst folks who voted for him, and they are willing to weather the storm, if you would, for a while longer. So I don't see any major changes by the end of this upcoming week. Now, the week after, I think that will be when people will be having more of a robust discussion as to the merits of tariffs, especially if there have been a few more countries that have come out against us with reciprocal tariffs. For me, this is just going to be week by week. I'm wondering how much weaker my current positions in the market will get. You know, if American Airlines or Delta, United drop another 25%, I'll buy that all day, every day. And yeah, so week two, I think the tariffs could continue into week two. But by week three, that is when we will be in crisis. And remember, the longer this continues, the more Americans will feel the first-hand effects. Take, for instance, the autos, right? Like if you're going to be buying a new car or buying a used car, that will translate into the markets sooner rather than, well, maybe not that soon. I think there is a backlog of inventory, but it really depends on the brand. Toyotas only have about a 30-day supply. So the more popular car brands, they fly off the lot pretty fast. And the other ones, they stick around. So some companies will do okay. Other companies are going to start hurting immediately. One thing to note talking about autos is the increase in auto insurance. With a 25% tariff on imported parts, that will be spread amongst all plan participants in insurance companies. So you are going to pay a little bit more for auto insurance, and people are really tired of it at this point because it's just been year after year of ever increasing auto insurance rates, and it seemed like just recently those rates had begun to plateau, and so a lot of folks were very happy. My recommendation remains, as always, make sure you shop around. With my 2013 Honda, I had left that under a prior insurance company and I hadn't really given it too much thought. But finally, one thing or another prompted me to do some shopping, and I'm going to go from paying $1,800 a year for coverage that was 250, 300,000, and with my new insurance plan, I will have $500,000 of coverage, and it will cost me about, let's just say, $470 for the year. So there is certainly some savings to be had if you shop around, and I do recommend that people do that. And it's also worth noting that your choice in vehicle can have a significant impact on how high your auto insurance rates are. Like if I was driving a 2025 Corvette, then certainly my collision, my comprehensive would be much more expensive. But because that is a 2013, that car is old. It's a very affordable car to repair. It's not super complex if there should be an accident, and if they did have to pay me out, I think market rate would be about like $10,000 or something. So there are ways to save money when it comes to your auto budget, and that's probably one of the biggest things that you can do in your daily life to make a huge impact on terms of savings. Jumping back over to financials really quickly, one thing I am certainly hopeful of and maybe looking forward to a little bit, praying for at least anyways, is for one of my new favorite picks, which is Abbott Laboratories. They are a medical device maker to fall a little bit. So they are currently 16 times earnings, but I do think when it comes to medicine, healthcare, things like that, that is the one field that people will pay whatever price they have to because everybody wants to stay alive. So I once bought into Abbott at 114, and I would have thought they would have fallen more. So they fell from 133 right before the announcement of tariffs and all the financial madness down to about 124. So they are a company that is really fighting this pull down, and I mean, if I can get them again for 114, if I can get them for 100, I would love that opportunity. So I know for many people, this talk of buying and selling is certainly going to be very stressful, especially if you're on a fixed income, and these are difficult times. I don't think that everything is going to be roses and balloons the way the president's making it out, that there will be an amazing future of plentifulness or something. I don't think that this is going to bring manufacturing back to the United States en masse. You hear the executives talking, the people of these companies, And one of the major issues that they've always had and they continue to have is finding skilled labor. Because if you bring jobs back, manufacturing jobs back to the US, it's not going to be some guy turning a wrench. It's going to be a man or a woman sitting behind a computer. Maybe they're a floor technician at a manufacturing website and they've got to go check on code and they have to do complex maintenance tasks. It's not going to be very simple things. And so we'd have to upskill the population that we have now for these jobs. And currently, before any of the tariffs, before this talk of bringing manufacturing back, we've had plenty of opportunity for folks who do want to get upskilled, right? Like if you wanted to become a service tech for an auto repair shop, in these places, they pay really good wages. Dealerships, private shops, they've just been dying looking for automobile technicians for quite a while so they can perform service on these vehicles. And that's another factor that plays into auto insurance, or has been over the while, is because there are fewer shop monkeys, as they call themselves, right? More of those guys have been retiring, and there's just not the young men or women to fill those positions, and so they have to charge more because they have to pay more to attract people into that field. And so if we couldn't reliably fill those positions across the country, I don't see the current events that are playing out helping that in any way, really. It's we're gonna head towards higher inflation. Currently, the president's policies of deporting low-skilled workers, I thought that could at least be a boon for low-skilled workers, because then there's less supply of low-skilled workers, which means wages would rise to attract the people that are left. But if you tank the global economy, then you won't need workers for a lot of positions everywhere, and that will actually suppress wages. So it will have counter effects. It's going to increase homelessness. Fewer houses are going to get built, although it may actually bring some relief to rental markets, right? Because as more people lose their jobs, they won't be able to afford rents, which means that there will be a oversupply of available places to rent, and that means prices to rent them will then fall. But that's not really the way you want to see that happen. You don't want financial ruin just so that rents can fall a little bit, and then just countless more people end up on unemployment, and it just would not be a good situation. The president's going about deficit reduction, reducing the national debt in ways that I don't approve of, and that's been a big issue for me over my lifetime, is the national debt. That's something I've always railed on year after year. And for instance, getting rid of IRS workers, like, why would you do that? I know he's gotten rid of DEI workers, and within the IRS, the civil rights attorneys who work for the IRS. And you know what? That's fine. I don't care about that. I care at the end of the day about money, right? Like, departments that are not needed can be let go, but you absolutely need IRS agents. They have to do audits. They have to make sure everyone's paying their fair share of taxes. And yeah, it's just a lot of things that are not being well managed. Some people think that the president is playing 3D chess, or that he is applying this pressure so that the Federal Reserve will lower interest rates. And just destroying growth is I can't, I don't know why you would want to destroy growth. It just doesn't make any sense to me. Sure, maybe the Fed will lower rates next quarter, but the only reason they'll have done so is because tremendous economic damage was done to the country, and the Fed is just simply trying to save us from financial ruin. But it's just not the way. I guess this is certainly something that you're going to have to sit back and watch play out. But at the same time, too, you have to actively protect yourself, and that will not be a fun time. It's just going to be a lot of stress. So find hobbies that can lower your stress levels. Get some soaps that you really like, and then take enjoyable showers, long showers if you want, and try to clear your mind. Don't allow the financial news to consume you every waking second. I'll tell you, for the last 2 weeks, it was difficult. My levels of stress were significant. I had to take a Monday off of work because I just needed to decompress mentally. I couldn't focus. And I think that's going to be the case with a lot of people this next week. And it's just important to look after your mental health. Go for a walk. silence your phone, or talk to friends and family, but don't talk about the market or politics. You know, plan a birthday, do something thoughtful, have a nice dinner, a homemade dinner. Just little things that can improve your mood. Go on a nice country drive, which is kind of what I did in this video. But I did not think it would be this busy. This is kind of an area where generally a lot of people have vacation homes. And so this was, I want to say, the very end of March when I went on this drive. And I honestly thought that there would be nobody out here at all. Like, I'd have empty roads. And I drove on a Sunday, and I think that was my problem. Everyone who did live in the region was out on Sunday, but if I'd gone on a Thursday or a Monday, midweek or something, then the roads would have been deserted. So I was a little disappointed with this drive because I really wanted to just be the only car on the road. Now, I have had that happen in that particular region if you're in that area on a weekday. So just not for this drive. But I am looking forward to summer coming. You can see the green shoots starting to appear on the trees. There is hope, and I think as summer comes, you will see moods begin to rise. People are going to enjoy being outside. Although I have to tell you, it was 65 degrees here in Rhode Island on Saturday, or no, I think it was Friday. And I was watching my car, and there were mosquitoes out. I'm just like, are you kidding me? Because that was the first 65-degree day, and I don't know how long. So I'm like, gosh darn it, mosquitoes already. I'm going to go hard on mosquitoes this year. You can't play around with those things. So, but at least I have. For me, cleaning my car is something that I find relaxing, and I do save a lot of money because I could pay somebody, whatever, $100 or $200 to detail it, or I can just do it myself. And anytime you do the job yourself, it generally comes out better than paying somebody else to do it, because other people, they don't care as much as you do. And that's one thing I always recommend. Hey, if you are going to purchase a vehicle, it's a good idea to maintain that asset for resale value later, and just so when you're driving it, you feel clean and happy. I know some people, God, they just throw all their fast food in the back seat, and then they clear it out every few months, and I just don't want to live like that. I know. Now I'm just completely pointlessly rambling. Anyways, this video is ending. If you want to learn more about free trade, check out Milton Friedman's videos. He was a famed Chicago economist, and he talked about this topic in depth, and I get a lot of my cues from him. Well, I want to thank you for joining me, and I will see you next time.